All right. Let's see if the new microphone is finally working. How you doing today? Everybody happy? What's going on? I started the stream a couple minutes early, so why don't I play some lovely music? give give people time to trickle in. And all right, hang on. Let me get that going, and then I'll reload my coffee, and we'll start in like 4 minutes. Hi, currency trader. My name is Wayne All right. You probably have a sound now. All right. I have to the go through and set up the mic. I thought I'd done this before. I guess it didn't save, but I have to set up the new mic on every different scene. So I'll have to do this one more time, most likely. But anyways, hey, good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Whoa, whoa. Huh? It's not quite zoomed, right? How do I look? Is it all right? Not too much? Anyways, I don't know how to change this camera. It's overdone, isn't it? No, that's not it. Video capture device. Yeah, that's about the best I can get it, though. Huh. Well, heels, bills. That's a little better, isn't it? That's a little too much. Too much pompadour today. All right, let's get going. I'm just trying to get the mic to be better than it was before. The point of this whole thing is to notify me. This is the Fed interest rate decision live stream that we will do later today. And if I can find our chat now. I have our chat. This was our chat. There we go. I should have a chat now. There we are. Cool. So I will post the link for you to register for that. Turn the little alarm thing on so you get notified. Cool. All right. So we are going to use TRADARS today. We're going to go through and do our little routine. I'll tell you now, the markets are quite calm while we wait for the Fed. And more likely people will get out of positions than get into position before the meeting. And so the real fireworks will be later today, if any fireworks, but volume and volatility is likely to be muted. Okay, so we will go through the nav bar and then call it a day. Gold afloat while traders fear hawkish Fed on inflation and tariff uncertainty.
Oil slips as Putin agrees 30-day halt on energy facility strikes.
Forex Live European FX News Wrap, dollar firmer with eyes on the Fed. What are analysts saying ahead of the Fed later? Dollar surges on safe haven flows. Fed meeting looms large.
Kiwi dollar US, dollar technical analysis. Eyes on the FOMC decision.
Citi warns of potential underpricing of silver tariff risk.
FTSE drifts lower ahead of crucial central banks meetings. Irish residential property price inflation eases to 8.1%. Euro US dollar corrects sharply ahead of Fed decision.
Look at that. Housing prices are up 8% in Ireland. Oh, holy smoke. Oh, my goodness. So nothing on the calendar until we get to the Fed meeting, 5 hours and 39 minutes from now. And then later tonight or tomorrow, depending on where on the earth you are, Aussie jobs. So those are the two events that matter the most. And to give you an overview of implied volatility, check this out. It's the strangest thing I've ever seen. Fed rate decision. Something's either broken, which I don't think so, or based on a whole bunch of FOMC events, there's no reliable, repeatable pattern on any dollar pair on any time frame. So this means that today the markets are quiet, and I'll quantitatively prove that to you. And then we're going to get some volume and volatility later. And there's no reliable, repeatable pattern. Generally speaking, there's nothing but risk and very little opportunity today. And I can prove this to you quantitatively in multiple different ways. Do you feel like that's important information to have if you're going to be a professional trader that runs their trading business sustainably, that you match what you want with what is actually happening? This is looking at many Fed interest rate decisions, and there's no reliable, repeatable pattern produced by any result on any time frame on any dollar. So be careful. What you have is nothing but a skippity scalp at best, or a very, very long-term position at best. Cool. We're likely to break through implied volatility because when we do our calculation on implied volatility, you know, this is the implied volatility this time of day for Wednesday. Is today a normal Wednesday for a US dollar pair, or really just global markets in general? No, today is a Fed day. It's not going to be usual. It would be very unlikely that this happens. Okay. All right. So I think I would assume a higher level of volatility than a normal Wednesday. And usually at 2 in the afternoon, it's low vol anyway. Okay. So when you get to 2 in the afternoon, okay, we can see traders come back from lunch in New York. The London boys are already gone. And usually it's quite a slow period until the close. We'll probably do more than a typical Wednesday. But I actually don't know. And we don't know direction either. So if you come to the live stream later today, and again, I posted the link for you to register, in the 15 minutes before it comes out, I'll tell you what's going to happen before it happens. For people that are in my fundamentals group, we met this morning, and I already told you what's going to happen. How do I know what's going to happen? I have the data. And I thought about it, and I might be wrong. I don't know the future, but I have pretty logical reasons to think of the way I think. Zach's gone to Dublin, bloody Dublin. Right on, man. Zach, that's cool. Richard says we have to see jobs deteriorate to get the Fed to cut aggressively. Well, okay, aggressively, yes. The only way that the Fed cuts aggressively, so you're using words that mean things. So I want to make sure we're speaking the same language. If not, you have to change your word. But when you say aggressively, you're telling me the U.S. economy is collapsing. I don't think that is the most likely scenario, but it is a possible scenario. What I discussed with my fundamentals team this morning was a collapse in inflation. And that's different. Well, it can be the one and the same. So if everybody lost their job and everybody stopped spending, then prices would come down. So imagine, I always like to think of Macy's, right? And Macy's bought $1 billion worth of bathing suits. Okay? And they're going to sell these bathing suits this summer. Well, the economy collapses. We go to 10% unemployment. And people are afraid about the future. So, what's the likelihood you're going to go and buy a new $50 bathing suit? Or if you're a woman, you get half the bathing suit for $100. Men just have like shorts, board shorts. Come on, guys, show off some legs for the ladies, huh? But you get some tennis short type bathing suits, huh? Come on. Do it for the ladies. They deserve some love. But anyways, imagine you're very afraid of the future. You've lost your job. You're concerned about running out of money. And are you going to buy a new $50 pair of swim trunks? No, you're going to use what you had last year. So what's Macy's going to do if they have a massive inventory of $1 billion worth of swimsuits for men and women? They bought $1 billion worth. We have them in blue. We have them in pink. We have them in red. We have them in black. We have them in white. We have them in yellow. Nobody's buying jack. So what does Macy's do if they have too much inventory and not enough sales? Love that ginger. Ginger pineapple. They lower the price. Disinflationary. So that's a bad way of doing it, though, right, Richard? That's a bad way of doing it. Yeah. Because nobody's buying anything. Uh-oh, everyone's lost their job. Uh-oh, disinflationary, but that's not the way you want to do it. Instead, you want input costs to come down, and it makes things cheaper when people already want to buy. So you're feeling good about the future. Your NVIDIA stock has come back. Okay. And you're like, you know what? I need a sexy new bathing suit so I can strut on the beach like a peacock. And I'm going to get something nice. So I have the Billiqueen. I know it's a flex. It's a flex. I only do it for a flex. My family laughs at me. A buddy of mine wore the Billiqueen, and I'm like, and he wore them every day, like clothes. Uh, he wasn't going swimming, but there were swim trunks. And one day I said to him, and he used to be a professional baseball player, so he had money, right? And so I'm like, hey, dude, what's up with the swim trunks every day? And he's like, well, they're Vibiliquine. And I'm like, I don't know what that is. And he's like, they cost me $700. Whoa, what? So then I have a conversation with a friend of mine in Dubai who's fabulously wealthy. And I said to him, dude, one of my friends paid $700 for swim trunks. What an idiot. He's like, Vibiliquine? I'm like, yeah, how'd you know? He's like, I own like 7 or 8 pairs. You know, I'm over at Target going, oh, dang it. $22 for swim trunks? This is bullshit. I'm going to wait till they go on sale. So, anyways, I think I'm going to send a pair of Vibiliquine to Cuba. Yeah. And they will not care. Yeah. Because it's stupid. But when things are booming and the rich get richer, they have to have $700 swim trunks? It's weird, isn't it? What a world. I have a couple of Vibiliquine watches, too. They're expensive. So, anyways, how funny, huh? What a weird world. People are starving to death, and other people wear $700 swim trunks. Yeah, that buddy in Dubai, too, he spends $1,000 on jeans, on denim. And I'm like, how much are Levi's now? Oh, they're $80. $80 for 501s? Really? No, pass. Uh, what a cheapskate. Dude, I grew up poor. I know the value of money. I'm like, what? But I do have a pair, so I'm guilty. All right. So, how do we feel about hey Wayne, how do you feel about gold? I get questions like this all the time. Well, let me answer this differently. What I think is irrelevant. So, let's go to 6 different websites. Boom, 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 boom. And read 104 articles that these websites have written over the last 7 days. Boom, done. All right, having remembered and understood every single of the 104 articles, what was the general feeling? Sentiment. What was the general feeling about gold? It's quite positive, getting very positive. So I'll give you a hack that I gave our group earlier today. When we were down here, when the market was down here with negative sentiment toward gold, it was back at the end of February, beginning of March. Gold had fallen. Yeah, gold had fallen. Yep, 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 in price. Well, and the falling price led to negative sentiment. Makes sense. If people don't know, they don't know. They're afraid. It's the end of the world. Oh my God, I love gold. Oh, I hate gold. Oh, I love gold. Dude, seriously? Is that how people trade? Uh-huh. All right. The life hack, or the trading hack, if you will, that I discussed this morning is when there was negative sentiment in the market in general. TRADARS macro score on gold was very bullish. Institutional positioning was very bullish. Do you see the opportunity? You knew long-term long, and the market was freaking out because it fell for 3 or 4 days. 3 or 4 days? This thing's been up for 12 years. But you have to understand how these markets work and why they work. So this is 30 days ago. This is just the last week. So we care about this, okay? And so you can see, I would say this is buying up, right? This is it going up. This is the collapse, and this is it going up to make new higher high. Good to know, isn't it? Yeah, Brian. Yeah, when you lived in the jungle, we had at FX Boot Camp, we had a longtime member. What the heck is his name now? Can't quite think of it. But he lived in Hawaii at that time too, and he set up his trading computer outside. I don't know how he did it because it rains all the time in Hawaii, doesn't it? But he sat outside with his trading computer, and he had it like, when he had his webcam on, it would bright, like he wasn't even in the shade, right? He didn't have like a roof over him. I think he was just like outside. Yeah, but I don't know how he protected his setup, right, from rain, but he had his computer and his screen and everything outside, not a laptop. Well, one day we were doing like the swing trading group or something, where we have hours, right? I don't know if that would have been it. Yeah, no, because that would have been the middle of the day for him. But anyways, so he was talking on camera because I had asked a question, and he was talking in response, and he got hit in the head by a flying bird. Whack! You're like, oh no, the dangers of trading Forex. You can lose an eye. Yeah. I could. Oh, he was a cool dude, too. And he used to own nightclubs and stuff like that. He was a cool dude. Oh, like just on the edge of my brain, I have his name. But anyway, he was a cool guy. He was around for a couple of years. So, anyways, this is all radars about sentiment. Guess I'll have to rename it. Cool, right? So now, right? And the way this is organized is the most important things are at the top. And some of the important things are negative, but they're not just all the most positive. It's just the biggest positive and negative score. And things have changed a lot recently because some of these negatives were way up here. They're a lot less negative now, it seems. And then there's a lot of neutrality. Are you going to trade euro dollar today? Well, I can't prove to you that there's a reliable, repeatable pattern in what the Fed does. And it doesn't matter if they keep interest rates the same, raise or cut, there's no reliable, repeatable pattern. And lots of retail traders are going to want to just trade the ball, even though I can't prove to you if it leans to one direction or another in any situation. So it's statistically random. And then retail traders love trading euro dollar. So you're most likely to trade euro dollar. And I can't prove to you that the market feels one way or the other. It's not bullish or bearish. Nobody knows. 50 articles on 5 different websites over the last 7 days, and there's really no opinion at all. So I'm like, you'd be trading blind, scalping when there's no reliable, repeatable pattern on a pair that has no market sentiment one way or the other. They don't give two hoots about the euro dollar right now. So if you were going to do anything, I would pick a direction. Like you want gold to go up. You want Aussie dollar to go up. You want Kiwi dollar to go up. Okay. This is how I would do it if I was me. Oops. Okay. All right. 18 articles on 3 different websites, mostly from FX Street. Okay. And it's slightly positive, but it's improved a lot since before. So you're like, I can't tell what the US dollar is going to do in response to the Fed meeting today. But let's say you decide if Kiwi dollar goes up, that's the thing you're interested in. What if it falls past? And it could fall. It might fall. It's likely to fall. And you're like, yeah, but I can't prove to you if that even makes sense. It just could happen. So I would do it in such a way like, if this happens to go up, and I know the market kind of wants it to go up or expects it to go up, and then you get a technical opportunity to buy a dip and let it rip. Okay. And then how long do you hold it? I don't know. That's up to you. And if it goes the other way, just walk. Why? Because you can't prove how long it's likely to continue in that direction, and it would be counter to what it has been doing. Oh. That's how I would do it if I were me. And then you could, if you wanted, you can use your vol. So let's pick on Kiwi. Based on the implied vol, the highest high is up here. Okay. Now you can see technically this is not bullish anymore. Okay. But what this is saying is down here is where you would expect, if you believe we're going to go up, that's where you expect it to be. And the second one is maybe down here. So maybe the news comes out. So maybe we just kind of consolidate. And then the news comes out, it drops like a ton of bricks, and then you take it north. So you'd have to go into the meeting with the assumption of you're either going to buy at this price or that price. You can't prove the probability of it, so you're like, well, so you go in with micro lots instead of mini lots. And you're like, well, and and if it's sustainable, maybe you'll get another opportunity tomorrow. But okay, Helena, we've already discussed all that and you missed it. You're late. Yeah. You should probably subscribe so you get the notification sooner. And don't forget to sign up for the live stream later today. And don't be late. Yeah, it's all right, Helena. Let me pop that link. I think I still have it. There you go. Sign up there for our event today, guys, and I'll get you all prepared. I'll tell you what's going to happen before it happens if you want. And then we'll just kind of talk about it until the press conference, and then we'll just fart around during the press conference. So let me tell you why I am not excited about trading at the moment. One, I think I know what's going to happen at the Fed meeting. Two, I can't prove to you if I'm right or if I'm wrong what the market will do. So I'm going to treat it as random. I don't like random. I like when I have an edge. Okay, so most things are flat. The market is flat. We'll look at the risk gauges, flat, flat. Scatter plot. Okay. When you look at a scatter plot, you don't want to see a shotgun pattern. because it means there's no pattern inside the chaos. See, chaos theory is about taking large data sets that look like chaos and then be able to find quantitatively or statistically patterns inside of the chaos to understand what's going on. So if it was mostly this way, I could tell you what is likely to be happening. If it was mostly this way, I could tell you what most likely is happening in the markets. If it's this way, it's random. There is no reliable, repeatable pattern inside what's happening right now. Once again, another level of risk. The market is neutral, and you should not be aggressive when the market is neutral. For all those that agree, say aye. You need to align yourself with market forces. Now, if you happen to be a market mover, you're so big, your trades are so big, you move the market, you would have a different strategy. But if you can't move the market, your job is not to beat the market. Your job isn't to be smarter than the market. Your job is to trade with the market and let the market carry you. This is why I don't like counter trending. I don't want to counter trend. I want to trend. So I need to know what everyone else is doing. I'm not trying to beat them. I'm trying to join them. Okay, so we have our Fed, and they're expected to do nothing. But there's the press conference and a dot plot, baby. A dot plot. So I'll talk about all of that before it gets released. We got the Kiwi GDP, fine, but that's going to be overshadowed by the Aussie jobs report. Cool. That's a nice little scalping opportunity. Is it? How do you know? Well, let me show you. Nope. Wait, what? Nope. Nope, what? There's no reliable, repeatable pattern. And I noticed this, I don't know, 15 years ago, I guess, where it only became a scalp. And I traded price action and all that stuff, right? So it produces a trade and it produces volatility. The reason it's not on here is there's no reliable, repeatable pattern in the response to the numbers of Aussie jobs. If they're greater than expected, as expected, or lower than expected, it's going to create some level of volatility. I just can't prove to you. Prove. I can't prove to you. I can have assumptions, but I can't prove to you the direction of the volatility. Is it up, down, or sideways? I cannot prove to you on any dollar pair. But it doesn't mean there's no trade, but it's a different type of scalp, isn't it? There's no 2 hour, there's no 4 hour, there's no daily, and there's no 48-hour pattern. But you will get some vol. So make it a scalp. This is what I noticed 15 years ago. I would make my pips on the Aussie jobs report and then cash out and walk away. I learned the hard way not to hold. Up and out. And back then I could make like 150 pips in 5 minutes. And so the way I learned the hard way was in situations like that, I would jam my stop at break even. Aussie jobs was always late at night. So I'm like, oh man, this is going to run. I'll let it run and I'll pick it up tomorrow. Right? Maybe I'll be at 300 pips by tomorrow. And over and over and over again, I would do this. Move my stop to break even. I'm up 100. I'm up 150. And I'm like, I'm going to let it run. Why? I'm a trend trader. Cool. And, report after report after report, I'd come back the next morning, New York time, or even California time, and I'd be knocked out at break even. I'm like, dude, I was up 150 pips. It came all the way back. So then I got to the point, having learned the hard way, I would buy, and if I was up 100 to 150, I'd take the profit and walk. And I did teach this. This is what I taught specifically for Aussie Jobs 15 years ago. I can now prove to you quantitatively why I developed this opinion. And it's only based on the last 12 or 24 jobs reports in Australia. But it seems to be the same. That you're up and out in a very short amount of time. But I don't think it's going to pop 200 pips, do you? No, I think it'll pop 40 pips. Well, welcome to the world. So we went through the calendar, check our positioning. Now, why would we want to do that? Well, we were picking on Kiwi dollar today, and 60% of retail is long Kiwi dollar. And right now, the sentiment is long Kiwi dollar. So, and we believe that short-term sentiment is probably more retail than institutional, but we'll check that. But if it went up today, retailers are probably going to trade that with you. For those that scalp the news, for those that day trade, like institutions don't really scalp or day trade, they make bigger decisions. But nonetheless, you'd be trading with retail, not against retail. Now, these extreme positions, these are the ones you probably want to trade against. Okay? Maybe. Okay. Now, how do institutions feel about Kiwi? Institutions are heavily short. They disagree with retail. They disagree with current sentiment. So maybe the move is just simply dollar. Yeah, Zach wants to sell. That's thinking forward. Yeah. You're like, it's going up now. Sentiment is up now. So, Zach, part of your analysis then is I want you to use the sentiment tool to see when the articles being written about Kiwi dollar are changing. Because if it goes from bullish to less bullish to neutral to bearish to more bearish, sentiment by retail is going to go, is going to change. And you want to line up, in this case, you want to sell with retailers when retail traders are aligned with institutional traders. Or to say it differently, you want to trade with the institutional traders. That's not what's happening on the short term. It's what's likely to continue in the long run. So maybe, just maybe, okay, this will switch, and you'll see it when the articles being written about Kiwi dollar are more bearish. And for those that are short-term long, they're very going to move quickly to short-term short. And now you've aligned these two markets and you're only trading in that situation. So that's why you want to go to the markets tool and line up the retail sentiment in the articles with the institutional positioning. These are positions, they're not opinions. And you're going to assume Kiwi dollar down. In that case, I might do Kiwi dollar down or Kiwi yen down. Okay? Unless I see dollar index rising or something like that, right? But Kiwi yen is less bullish. But maybe it has less to lose. So I don't know. Keep it. But you have the data. That's the most important things, guys. You have the data. TRADARS removes all guessing from trades. You will never guess again. Cool. Cool. Is the Fed going to cut? No. Okay. This is the dot plot. And currently, they have put in a cut, but we will have to pay attention to whether that changes. I don't think this one's going to change, but I also don't think we're going to get the cut. But that's not for me to say. What we know is we're in that 4.25 to 4.5, and the cut's not supposed to be now. When's the next cut? When's the next dot plot? It's in the May or June meeting. Okay. I think it's June. So at best, there's a cut in June. And a lot of data needs to happen between now and June. And the June meeting, I think, is set for a pretty reasonable scenario in which they don't cut and they update the dot plot and all of this changes here. But this is what we know to be true from the last dot plot. These are not guesses. There's not assumptions. There's no AI crunching out scenarios. These are the facts that the Fed have given us. So currently the June meeting, but this could all be pushed. Isn't it nice to have it all plotted out? Yeah. It's not what you think, it's what you can prove. No opinion pieces here. Yeah, rates are supposed to move a lot. Do you think it's a coincidence that it's on Fed meeting week that we have expected rate moves This is a dramatic week for interest rates. Huh. It's kind of cool, isn't it? Treasuries, baby. Yeah. We're going to have a cooling off period next month on Bitcoin. Interesting. Check it out. Oil typically falls this week and rises next week. Did you see oil yesterday? Tell me this is good to know. Oil typically has a very bad week this week. But typically, when you look at next week over many next weeks, there's a recovery. Yeah, I like to know this. Ba, 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 ba. Ba, 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 ba. Ba, ba, ba. So, anyways, pretty cool, right? I know. And so you should have already created, like I picked on Kiwi Dollar today. You notice that? You should already have hit lists of things that you're going to watch today and track today. And so there's a couple of ways of doing that. I've showed you sentiment. You can line up with sentiment. You can do seasonality. You can do macroeconomic scoring. Okay. Positive scores and negative scores. Look at that, a -5 on oil. Well, hails bales. The other thing that I like to do is line up seasonality with trend. NASDAQ passed. S&P 500 passed. DAX 5. Now you have to confirm and deny all of this with technical analysis, which we will do in a second. But at least put this as a starting point. Maybe DAX today, maybe Nikkei today, and long. It's not, we have an absolute score that's negative, but that's unusual. Should you trade Bitcoin today? No, pass. What about gold? Yep. And only to the upside. What about Kiwi Swissy? Yep. Euro pound? Yep. See, I used to go to car auctions. Okay. And then you can zip it around the other way. Things you want to sell. Do you want to sell FTSE today? Nope. What about Dow? Yep. What about pound yen? No. What about Aussie yen? No. What about treasuries? Yep. What about, you see? And now things like Aussie Kiwi usually falls this time of year, and it is falling, technically. Yep. So now you know things another way. You create a hit list of things you only want to buy if the charts tell you there's a buying opportunity, or things that you would only want to sell if the charts confirm there's a selling opportunity. Nothing is random. So now you go to your charts. Aussie Kiwi down is one of your opinions. Oh, is that Rebate? I don't even know. Do we even have it? Yeah. Okay. Great. Aussie Kiwi, we're looking to sell. And we're going to look for reversal patterns, which would be showing signs of if it was up before, is it changing directions now? Based on pattern recognition. Chart patterns focus on trends, so it would only be focusing in on this if that's so. A reversal would be likely a smaller time frame. A trend would be sort of a medium to longer one, like, we want to connect lower highs, right? Connect lower highs and then get short. Okay, that's what we're looking for. Now, because we've already identified that statistically it's bearish, that most likely there isn't Fibonacci patterns unless the bearishness is reversing. Most likely we're going to see mostly trends to the downside. But on what time frame do we want to start setting up our trade? You see? So we aligned seasonality with statistical trending. Aussie Kiwi, this is just one of several, but not many, trade opportunities for you today. And then I say, hey, show me the bearish trending patterns I can enter right now. And that's them. You're like, Wayne, I don't see anything. Yeah, there are none. Now, are there any other patterns? Let's just see. But I was looking for, if I'm a bear, I want bearish patterns. Nope, they don't exist. Okay? And there's only the consecutive candle thing. So what this says is later today. Here's how you trade this. Okay, so it's not an opportunity at the moment. It's a threat. So maybe later. Done. You understand, like, if you did this and you only had 5 or 6 things you wanted to look at today because you lined up fundamentals with technicals and sentiment and seasonality, and now there's only 5 things you want to look at, and then you can have a technical analyst look for reliable, repeatable patterns on multiple time frames on only the pairs you're interested in trading because you understand exactly why you want to place those trades and you know exactly the direction. And then you have your technical analyst look at the 15-minute and the 30-minute and the hour and the 4-hour and daily and only looking for reliable, repeatable patterns. And it just pops out the proper time frame for you to consider and the type of pattern that you're considering, whether it's an opportunity or a threat. And you could be done in a matter of minutes instead of hours. And every trade you make is smart, even the ones you lose money on, because at least you had logic behind what you were doing. So let's just pick on a bunch of other things. Let's say it was like sell Aussie Day. I'm just making it up. I didn't look at the score, right? But let's say today was sell anything Aussie Day. Okay? And now I can look at all Aussie pairs on 5 different time frames, and I get beep, 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 beep. Okay, that's cool. That's a lot. But that's too many. I don't want all that many opportunities. It's too confusing. So what do I want to see? What is my best case scenario? I don't want to trade back to support and resistance. So if I'm in the middle of a range, I don't want that. I don't want to see that. Reversals, maybe. Trending, definitely. Breakouts, no, because I'll catch that later. Those are trades for tomorrow. These are big moves. Again, these are you'll probably get a pullback and let it run. These are probably more like swing trades. So I just want to see trending patterns for today and reversal patterns to see if there's an opportunity or a threat. And I'm only selling Aussie, so I know the direction I want. So I save, and now I look at these only for the patterns I'm interested in seeing. I know what my direction is, and I'm going to have my technical analyst show me reversal patterns and trending patterns on any of the 5 different time frames if they happen to exist. And I want to sell. So how quickly can I do this? Of course, I would have been done minutes ago, right? But anyways, nope. Yep. But the problem is it's an up channel. So you could, but it's not good. You could, but it's not good. Okay? Because the pattern is a bullish pattern, and even though the next leg is down and you know, whatever, I flipped the coin and we said we only want to sell Aussie today. Okay, you could and get to the bottom of the range, but it's not trending down, it's trending up. So it's mediocre. Okay? So really, if I'm going to be conservative today, and I want to be, okay, no, even though it's likely to fall, it's still not a good opportunity. Okay? This is likely to fall. It's not a good opportunity yet. Okay. Aussie Swiss franc on the 4-hour. Yes. Yes. Cha-ching. Maybe, baby. But on the daily, no. No. So it's kind of a day trade. Okay. Well, what about this one? Well, if we get to this range, which is also a roll reversal, I can take that down. So it's saying on this other one, it could possibly go all the way up to 57. But the smaller one is here. Oh, wait, it's yen. Sorry, my bad. So, my bad. So, no, this is good. It's a day trade. You might be in it, maybe even just in today, out today. But if it does pop on the yens, you can take that down. Cool. So you have, out of all yen pairs on all time frames, only looking at reversal patterns and trending patterns, there are only 2 trades for you to consider for today. That's Aussie Swiss franc on the 4-hour and an Aussie yen on the daily. Done. Now imagine you had all that thought going into a trade, and you could be done in, I don't know, 2 or 3 minutes, 5 minutes. Your whole trading day now, your planning now takes 5 minutes, and you're doing sentiment, you're doing fundamentals, you're doing technicals, and they all line up, and you know what time frame, and you know what pattern, and you know why you're taking the trade. Or you just trade what you like. I only trade euro dollar. Good luck with that. No rationale at all. I can tell you I'm neutral on that sucker based on market sentiment, but I can also tell you if I'm actually long-term bullish or bearish. I don't have to guess. But we'll look at the schedule. I guess I should pop today's stream onto the schedule. I hope you're using the free Squawk Box on YouTube. I hope you guys are using it. Wait, it's not live? It's not running? Wait. What? Really? They're just not posted 2 months ago, 2 weeks ago. Huh. It's supposed to be live, like right now. Huh. Very strange. I'll have to take a look at that. Hmm. What else going on today? Yeah, it should have been running. Yeah. So, anyways, yeah, okay. I didn't get a notification that the server shut down. Maybe YouTube manually shut it down after a while. It'd been running and running and running. I thought I even used it last night. I think I used it last night. Like it's running on my laptop. It's strange. Yeah, I did last night. Hmm. So maybe it just shut down this morning or something. So, anyways, market opens later today. This is actually tomorrow, 3:45 in the morning. Then our fundamentals at 7 a.m. Very cool. Yeah, Pete did his stock trading live stream on last night. It's kind of interesting. 7 o'clock at night. Now that's funny because this wasn't supposed to pop up this way. Weekend. Click training. Okay, that's the way it's supposed to be. Although it's not supposed to be dark. And it's not dark on my laptop. It's dark here. Visit details. Customization. Light mode, yeah. Dark mode. Light. Okay. It's black. All right. But anyways, it's something. Okay, and you can get to the feeds over here. So that's that. Check it out. We have a rebate program now. So how would you like to have all of traders.com and get a cash rebate? Cash. I will PayPal you money. So let's say you sign up and it's $200 a month. Okay. If you use Traders Execution, okay, and you do a modest amount of trading, you'll get $100 or $200 back. How easy is that? And not added to your trading account, not a little credit, not fake money. I'm going to PayPal you cash. Is that a fair deal? Not a credit, cash. You will get an email from me if you trade enough volume. You'll get an email from me that says FX Bootcamp is sending you a $200 transfer. Would you like to accept it? And you'll have $200 in cash. Does that seem fair? Yeah. So now TRADARS is like a Bloomberg terminal. We have sentiment radars, fundamental radars, we have technical radars, we have performance coaching, we have execution, and we even have funding. So I'll update the homepage over the next few weeks, but for those that are already members, you're probably already on board. But now you know. Isn't that cool? Real simple. And can U.S. citizens or residents join the rebate program? Yes. So my intention with this program is TRADARS is essentially free. I think it's that important that every single one of you needs to know how to trade like a sustainable business. I want you to make institutional quality decisions and then be able to streamline your decision-making process so you can look at the right thing for the right reason at the right time and be able to very quickly analyze opportunity from risk, separate the two. And I want you to have performance coaching. I want you to have a community to keep you sharp, to keep you focused, so you can ask questions. You can learn the process. You can learn the ropes. You can benefit from more experienced traders. And I want it to cost you nothing. And if you need some money to trade, we got that too. That's my intention. My goal for you is that your trading becomes a sustainable small business. And it costs you nothing. Shoot, maybe you even make some. So we got some awesome stuff. I will see you later today. I hope you're okay with the green tie and a blue shirt. A light kind of grayish blue. Nice. The green tie has a little bit of grayish dots, grayish blue. So my shirt matches a little. Cool. I'm going to be a good daddy today. So I will go be a good daddy, and then I'll rush home and be ready to go for our YouTube live stream for the Fed meeting, in which I will tell you what's going to happen before it happens, and then we can watch the press conference together. So 1:45, I believe, is the schedule, Brian. I probably will check in around 1:30. Hit the go button, 1:45. Discuss what I think is going to happen. Then we'll get the decision. Then we'll have some fun. And then the press conference. Yeah. Cool. So thank you for being part of the Forex.Today community. Okay. Join tradars.com. It's going to revolutionize the way you trade in a very, very good way.